All right, Calgary, if you're buying a home, now is the time you've been waiting for. Kind of. If you're selling, pay attention because we've seen a shift and it is going to affect you. We're at a turning point here in Calgary, and you've probably seen a lot of conflicting information about what's to come. So, what's really happening? Are prices going down? Is a crash coming? Or are we about to see prices rise again with more buyers jumping in with interest rates dropping? Today, I'll break it all down, including what October is looking like so far, and there may be a few things that surprise you. I'm Dawn, and if you're getting any value from my videos, please like and subscribe. September brought 2003 sales, which is a 17% drop compared to last year's record high. Now, while that sounds like a big decrease, it's actually still 16% higher than the typical number for this time of year. So yes, the market has slowed down, but this is still more activity than pre-pandemic levels. Now, here's where things get interesting. New listings surged with 3,687 homes hitting the market in September, the most we've seen for a September since 2008. This has pushed our inventory levels up to 5,064 units. With that increase, our months of supply is 2.53. So 2.5 being the threshold for balanced market. But here's my take. This September, we saw 496 more listings than last September, and there were 438 less sales. So we're seeing a lot of the inventory come on in these higher price ranges, and there is still quite a demand for detached homes priced under $650,000, $700,000, and along with demand in the attached products as well. So would we have had more sales if those lower priced homes were the ones that were coming to market instead? And let me ask you this. Do you think the influx of inventory in these higher price ranges are perhaps over-leveraged homeowners whose mortgages are up for renewal? Yes, rates are coming down, but if you had an interest rate of under 2% and now you have to renew at more than double, like 4.5%, that is going to affect you. And I think we will see some people forced to sell, unfortunately. The big story here is this shift signals a transition to balanced market conditions, but even though we do have over 2.5 months of supply, with that number being thought of as the threshold for balanced market, it still leans in favor of the sellers for now. So a balanced market is typically above 2.5 months of supply up to about 4 months, but above that is a buyer's market, and below that is a seller's market. Now, we're not fully balanced yet because each community and property type is its own mini market, if you will. For example, detached homes are just under 2.5 months of supply, semi-detached homes are just above 2 months, and row homes are just under 2. Apartments, though, are the ones really pushing the numbers up with 3.23 months of supply. And of course, we have to break that down to price points as well, because in each segment, the lower priced homes are where the demand is and where we see are all in a seller's market. So really, we're only balancing out in the higher price brackets. Speaking of prices, the residential benchmark price for Calgary in September was $596,900, which is a 5.5 increase from this time last year. But month over month, we've seen a slight dip. This cooling trend started in late summer, and we're still seeing its effects now. Breaking it down by property type, detached homes have a benchmark price of $757,100, up 8.8% year over year, but slightly down over last month. Semi-detached homes were at $678,400, up 9.5% year over year, slightly down from last month. Row homes were at $459,200, up 10.2% year over year, slightly down from last month. And the apartment sector has been leading the growth with the benchmark price of $345,000, making a 14% increase year over year. And as I mentioned, listings in this segment have increased, which is helping to ease price pressures. Each segment of the market has dropped month over month. Now, a stat you guys know I think is super important and have been tracking since we've been seeing these price declines is how many homes sold at or over list price. Back in May, during the peak of the spring market, 62% of homes sold at or over list. In June, that number dropped to 56%. By July, it was down to 49%, and so far in August, with 1,208 sales as of the 17th, only 40% of homes are selling at list price or higher. Well, we finished off August with only 39% of homes selling for at list price or over in September, and it was still up at 39%. So I think this is a great indication of the divide between sellers and balanced market we're seeing in the different price ranges. So if you're thinking of making a move, but it's not right away, there is a link below where you can see what homes are available or what your competition is if you're selling. So you're ready when the time is right. Beyond real estate, let's look at the broader economic picture. There's been a lot of talk about a potential recession, and some would argue that we're already in one and have been for quite some time.
The economy has been weakening in recent months, and inflation really looks like it's on a good track back to the 2% target. What stood out to me is really the concerns that policymakers have about the future trajectory of the economy. I think they seem quite worried about the prospect of a recession.
The rising unemployment rate and inflationary pressures are making things tough for a lot of people. A recent Bank of Canada interest rate cut has given some relief, particularly in the housing market, but the affordability crisis remains real. There is another rate announcement on October 23rd, and I think we'll see the bank get more aggressive and cut by 0.5 basis points, just like the Fed did in the States. We'll likely see monthly costs become more affordable for new buyers in the way of interest rate drops rather than prices going down significantly. Another policy shift worth noting was the 30-year amortizations are now available for first-time homebuyers, which helps lower monthly payments. I did make a whole nother video on this topic about the new mortgage changes and why I do not think they're a good idea, that you can check out here. But regardless, it does get more first-time homebuyers into homes, and they don't have to stay on the 30-year amortization track. On top of that, starting in November, the stress test requirement is being eliminated for uninsured mortgage holders who are switching lenders. So an uninsured mortgage is when they put 20% down or more when they were buying. So this is great news for homeowners looking for better deals when they're refinancing their mortgages. So what does this all mean for Calgary's real estate market as we move into the final months of the year? With more inventory entering the market and a potential economic slowdown looming, we could see price stabilization continue or even modest declines, especially in those higher price ranges where there is more inventory. However, at the entry level, where competition is still high, prices might remain flat or slightly increase. Lower interest rates and extended amortization periods will likely keep demand steady. So we're not expecting any drastic price drops. Calgary hasn't followed the same path as Toronto and Vancouver, where higher interest rates triggered price corrections. Demand here has remained strong. If you look at the period from 2015 to 2020, while home prices were rising in other major cities, Calgary actually saw year-over-year declines with values dropping by nearly $40,000. Now, while Calgary is becoming less affordable for many, this isn't a sudden spike. We're essentially catching up to where the rest of the country has been for a while. And even with the recent increases, I hate to say it, but our prices are still relatively low compared to other major markets in Canada. So I have been asked if I think we're in a bubble, and that answer is no. So far in October, we're only down by about 58 sales compared to last year, but pending sales are up. Of the homes sold, we're still seeing 32% sell at or over list price, and this was as of October 8th. So if you're thinking of selling, now might still be a good time, but I said this on the last video, we're getting to that time of year where I wouldn't suggest selling unless you absolutely have to. Like either sell now or hold off until the new year. Statistically speaking, as a buyer, you may be able to get a better deal in December. While the market isn't as hot as it was earlier this year, it's still in the seller's favor for now, for the most part. But it's important to know that your neighborhood and property type and price will all come into factor. So not a blanket seller's market or a blanket balanced market. But there are pros and cons to everything because waiting until spring will bring more competition, and I do think we will unfortunately see more over-leveraged Canadians needing to sell next year. So if you are selling, I think end of February is a good time. Now for buyers, increasing inventory gives you more options. But remember, entry-level homes are still competitive. We are going to see more rate drops, so be prepared that more buyers may be coming to the table. You know what I think we'll actually see 2025 be a good year for is that move up home, those move up purchases. Like with prices softening at the higher price ranges and still being tight at those entry levels, if you own a detached home, let's say around $600,000, and you want to upgrade past that $700,000 home, this could be a very good year for that. If you found this video helpful, please like and subscribe. If you have any questions, you can check out the links below for my guides and tips or to book a call. Thanks for watching, and I'll see you soon.